Yeah, I think what allowed us to raise the guidance was really a story of resilience of demand across all geographies, with towards the end of the quarter, even the US picking up again as we move towards the seasonal year-end peak. And resilience also in our operation, where despite a lot of inflationary pressure and a lot of uncertainty, we've been able to trim costs and keep our costs under control, and thus lift margins across all of the businesses. So what we saw in August, still very much the case today, holding quite strong and quite stable, and that allows us to lift the guidance as we just did.
Well, sounds like a strong result across the board. And I know many look at your company as a bit of a bellwether, a barometer for the health of global trade. How would you characterize the global trade picture right now?
Well, as we still have pretty strong growth across many of the geographies, I think that all the talks of a death of globalization or of deglobalization have been quite premature. We see, to the contrary, that the level of trade and the integration of the economies is growing, and the main engine behind this is actually the strength of the manufacturing powerhouse that is China, and that continues to see growth across multiple regions. And this has been the story mostly for the last 2 years, and has been one of the reasons why we've kept on being surprised by the strength and the resilience of demand across all the products that we're doing, because it is fueled by this China manufacturing story.
Vincent, good morning. It's Karen jumping in. It sounds like moving chess pieces on the high seas when it comes to shipping, and those freight rates have been signaled as being much lower in Q3 given the imbalance in supply and demand. How would you characterize what we're witnessing from here, and what happens as we gear up into 2026?
So I think, freight rates have always been a bit volatile, but certainly since COVID, the volatility of those freight rates has greatly increased. So we have seen, as we see these fluctuations in demand, whether it is Liberation Day or some of the eliminations of tariff, the strong demands coming in, the disruptions in the Red Sea, you see a lot of that volatility playing out with rates going up and down. Here during the quarter, there has been a significant downward adjustments, which we were expecting on, and the reason for this is not really demand driven, it's more supply driven. There is a lot of tonnage coming online, and there is a bit of concern for what this is going to mean in the future. For me, this is really a bit of a sideshow seen from the fact that it has, of course, a big impact on our financials, but this volatility goes a bit up and down over time, and I think what is really important for us is the execution of the strategy, the strengths of the underlying demand. We have all the tools to deal with that and weather whatever storm is going to come.
What was coming through in a lot of the commentary recently from a number of commentators was that China was compensating for the lack of ability to sell as much merchandise into the United States by claiming more market share in other key countries. Are you seeing any evidence that that still is the case?
No, I think for us, the evidence that we see is that the increased share of China into global trade is something that predates the tariffs in the US. It was already the key feature of last year, well before all the stories that we have seen this year with tariffs. And we have seen this holding steady, actually. It's not really been increasing following the jitters towards the US. So I think for us, this is something that we see as more of a trend that has been with us since 2023 and seems to continue to be one of the key features of what is happening this year.
Just a final one on tariffs from me. Juliana might have some more, but let me ask you as to whether we're done in terms of some of the turbulence, because it feels as though the market had been hoping for some clear deadlines the back of Liberation Day. That didn't happen. We had more tariff negotiations over following months, and of course the US and China too. Does that mean we've still got more volatility ahead from your lens, or are we mostly done?
I think we're going to have still some volatility ahead. There's clearly been some good news recently, especially following the summit between President Xi and President Trump. But a lot of the measures that have been taken have a certain expiry date. A lot of them go for a year. So I think there is still a need from business in order to drive the level of investments that is necessary. There is a need to see more of where is the playing field settling, what are the rules of the game on a more permanent basis, so that some of these investments and some of these decisions that have been postponed because of the volatility, they can actually be made and fuel the activity that we will see for the years to come. So I think from our perspective, we see a lot of things moving in the right direction, but we can only wish for more stability. Whatever the playing field is, stability, I think, is one of the key things that we're looking for and that our customers are looking for so that they can make the decisions they need to make.
Vincent, let me ask you a little bit more about China. As you said, for the last couple of years, China exports has been the main growth engine of the container market volume growth that you've seen, and that continues in the most recent quarter. Where are the exports going, and has there been a meaningful change in where the shipments ultimately end up as a result of the changing trade environment?
I think what has been really impressive is how broad-based this is. I think the growth has been extremely strong into the rest of the Asian countries. It's been strong into Europe, into Latin America, into Africa, into the Middle East. Even in North America, it's been less, but it's still been positive, in positive territory when you look at both this year and last year. So I think this broad base gain in market share that we're seeing from China manufacturing into global trade has been very strong, it's been very broad, and it seems to have quite a bit of momentum still.
Last time we spoke, you also flagged the continued disruption in the Red Sea. Can you give us an update on where things stand and what we can expect in the quarters to come?
Yeah, so we're extremely pleased, of course, with the fact that the situation on the ground in Gaza has evolved for the better. The ceasefire is a fantastic development and is one of the prerequisites that we have for getting to safe passage eventually in the Bab el-Mandeb. I think for us right now, what is really key is to observe that this is not going to go in reverse and actually get into a more permanent basis with forces on the ground and a reasonable expectations that we move towards a reconstruction rather than risk falling back into conflict. And then we need to assess the situation and see when we feel that the prerequisites are in place, when are we ready to reopen normal traffic routes, if you will, and sail again through Bab el-Mandeb and the Red Sea, which is actually, it's the right traffic route. So eventually this will happen. It's still a bit young in terms of the progress that we see in Gaza for us to be precise on when and what is going to happen.
Vincent, it's a big event on the calendar next week, COP30. The world is counting down. The shipping industry in recent years making fairly significant commitments to decarbonize shipping. What do you think the priorities should be for COP30?
Well, I think from our perspective, we're regulated by the IMO, the UN organization, and IMO just voted to delay measures or implementation by at least a year. So I think for us, it's really important that as stakeholders gather in COP30 in Belém, that we re-examine the situation and can turn this 1 year postponement into just a 1 year delay. In which case, as far as shipping and logistics is concerned, we have a strong platform to execute on the transition. If these delays were to be extended, if the momentum that there is was to slow down, I think we will face a lot of difficulties in being able to meet the targets that we've put forward.